This is Conversations, a weekly financial podcast featuring interviews with leading investment strategists, noted technical analysts, and other key thought leaders. Brought to you by the Market Technicians Association.
Good afternoon, ladies and gentlemen. This is Conversations, the official podcast of the MTA. My name is Kevin Hockert, CMT, and my guest this afternoon is Ralph Acampora, CMT. Many, if not all of you, know who Ralph is, of course. Ralph is currently the Director of Technical Analysis for Altera Limited. Ralph also, of course, is a pioneer in the development of market analytics and has a global reputation as a market historian and a technical analyst. Ralph was formerly the Director of Technical Research at Smith Barney and Prudential Securities. He is a published author and popular lecturer consulted by financial experts and journalists worldwide. Ralph has lectured at the New York Institute of Finance for over 40 years and is a co-founder of the Market Technicians Association. He also helped create the Chartered Market Technician Designation Program, which is now recognized by FINRA as the equivalent of the Chartered Financial Analyst designation. Ralph also serves as the co-chair of the Minnesota chapter of the MTA. Welcome, Ralph.
Thank you, Kevin.
Absolutely.
Thanks for having me.
Yep, delighted. Before we get started, Ralph, you may know this, but I want to thank you once again. You've had a profound impact on my career.
Wow.
You were instrumental in encouraging me to pursue technical analysis and also the CMT
Great.
Designation. And
that's awesome.
yeah, and I really appreciate that. I'm sure that you've had a similar impact of hundreds of technicians around the country. Mm-hmm. We really just can't say enough about you and what you've done for the technical community. Co-founding the MTA, the FINRA recognition certainly was a monumental event. Well, let's face it, I mean, you've had a huge impact on the technical community in the MTA, and there are hundreds of us that are indebted to you. So thank you again.
Oh, Kevin, that's wonderful. Thanks for the kind words. I get a tear in my eye when I think of the past and in the future too. But, the luckiest thing that happened to me is Alan Shaw, my old buddy and friend now, hired me from the class in 1969, and a year later he needed someone to substitute him in the class.
Okay.
And I've been doing that for 43 years.
That is awesome.
And we taught, between Alan and myself, we taught thousands of people, many of the traders on the floor of the stock exchange. Bill Griffith on CNBC,
Sure.
He told me the other day he was a former student.
No kidding.
Yeah.
Wow.
John Murphy was a former student. Oh, yeah. It's great. It's great. It's wonderful,
awesome.
Wonderful.
Speaking of your experience, maybe we can just tap into a little bit of it. 40-some years on Wall Street, basically.
Close to 50.
Close to 50
I'm
as
proud
a
of it.
technician.
Yes.
You were speaking earlier that you've lived through, 4 crashes, excuse me. We can learn a lot by reading books, but you and I and many will agree that probably the best educator is real life experiences.
Mm-hmm.
When you're in the trenches. Any advice you have for young technicians coming into the industry?
Kevin, I asked that question, that's very same question, to Richard Russell out in La Jolla, California. We're doing a tape for the MTA. It's archived. It's a couple of hours worth, I think. And at the very end of my presentation to Richard Russell, I said, "Dick, what's the last few words you have for the next generation of investors?" And he leaned into the microphone and he said, "Never fight the primary trend." Typical, absolutely wonderful. My answer to that is almost the same. We have such sophistication today. I mean, it's awe-inspiring what we can do today with computers and all. But I got to tell you, being able to draw with ruler in hand, the correct trend is the most important thing you can do. We get too fancy, we move too fast. And I tell you, I see, especially on television, these guys flicking trends all over the place. And honestly, if they were students in my class, they would fail. They can't draw a trend.
Sure.
And you never fight the trend. So the first thing you look at is price.
Right.
And then you identify the trend, and you're on. I mean, you can get very fancy with all sorts of indicators, Kevin, and, I'm sure you have done a ton of things that I don't even know about. But I know one thing.
Sounds
price is my God.
Right. Good advice. Keep things simple.
Yes.
You gave an excellent presentation here this afternoon, and when you start talking about drawing charts, et cetera, it makes me think of some of these old line tech companies, if you will, these charts of stocks that have these long bases.
Yeah.
And, maybe just a ruler would suffice in taking a look at some of those. Care to talk about it?
Yeah, Kevin, thanks for that question. It's hard talking to a group of fellow technicians. Because you can't mumble at them. They know what they're looking at, and that's cool. But what I wanted to do with the audience today was to step back and say, listen, I'm a long-term bull, secular bull market. And heck, this bull market's only 5 years old. I'm sure we're going to have a bear market and we'll have all those things. But over time, I'm talking about the next 10, maybe 15 years more over time. And I use the 82 to 2000 as my example. I lived through that. And then we had crashes and everything else. But over time, you're going to have that kind of a market. So I want to leave the audience with the view of long-term investing. And what the best thing to do is to compare the short term, the daily chart, with the long term. And I had some pictures today of stocks. Intel is one of them, which just spiked up in the last couple of days. Very exciting. And you say to yourself, well, gee, maybe I wouldn't want to chase it. And I think that's good advice. But when you step back, and I show the same picture on a monthly basis, heck, that stock hasn't even started to move yet. Right. If you believe that 10, 12-year base that it has, Microsoft's like that, GE is like that. Oh, there are a whole host of names. Broadcom, Micron. The semis are just. I think it's a huge game of catch-up because the semiconductor index is not near its 2000 high. In fact, it's got a ways to go. NASDAQ is about 8% away from making a new high, all-time new high. So there's literally a massive game of catch-up because these are the stocks that the bubble popped in 2000 and brought the whole market down. And people are a little leery about investing in them, but I think that's wearing off. Here we are 10, 12 years later, and I think the juice is starting to flow again, Kevin.
Sure. Perhaps in the lows of the '09 market, and as we came out of that a little bit, the last thing on our mind perhaps was looking back, 2-3 years because we knew what was behind us.
Oh.
But your advice basically is maybe lengthen our time frame a little bit, or at least if we're consulting our short-term charts, fine. Take a look, though, at long-term because there might be some things, some very important price levels that... Absolutely. And it's very easy to get caught up with the moment and the excitement and everything. But when you step back, and again, taking a long-term view, because I think this, secular bull market's got a long way to go, boy, you see a completely different picture. Sure.
And some of it's extremely impressive.
Yeah, appreciate the advice. With this in mind, I guess what I'd like to ask you is, to a degree, we're all in the forecasting business, and as we talk about some of these long bases, et cetera, and you're encouraging us to, focus on the long term, and in addition to a few of the other things that we utilize, of course. What do you see? What do you see for what's in store for the markets here over whatever the time frame is that you
Well, I think on a very short-term basis, Kevin, it's not profound to say that the S&P is go to 2,000 or 2,100 anytime soon. I think that's in the cards. The Dow is flirting with 17,000, maybe goes to 18,000. I wrote a book, and I don't want anybody to buy it. It's out of print. I wrote it in 2000, said that the market has Dow has a target of 20,000, but I put a date in it, the year 2011, so I'm off by a few years. But you know what? That 20,000 is very doable. It won't be tomorrow, but it does fit into my long-term secular bull case.
Sure. You talked about something else. We go through these big cyclical bears, if you will, two of them in the last 12 years. And I think our time horizons tend to get shorter. But there's a few things that can maybe help tip us off to, a sustained bull market. I think you talked about rotation, maybe a few other things. And, care to talk about that a little bit? Or?
Yeah. In the presentation I made today, I was trying to say when we started the year 2014, again, here I am, a long-term bull, and I had some problems. The market was way ahead of itself, and then shortly thereafter, in February, March, and April, the risk trade got clobbered, the Twitters and the Facebooks of the world. And we needed to see that. It's painful, but we needed to see that. And what was interesting is that I was wrong on this. I thought it would cause other parts of the economy or other parts of the market to succumb to the same kind of pressure. Maybe not 20, 30%, but at least a good 10, 15% correction. And we didn't see that. And we started to see rotation again. So to say that the market is about to enter a significant pullback, I have to see the evidence. Okay. And you know what? I don't see it.
Just don't see it.
I know the seasonality is out there. This is the second year of a president's term in office, and it's the midterm election. And that history is very, very compelling. So between May and October, I wouldn't be surprised if we got a little bit of a bumpy action. Just remember, the two worst months of the year is May, and we're past May. That wasn't bad at all. And then you have October, and October's out there. So I think this market strength near term carries, and maybe we have a little tough September-October period. Sure. I would welcome it, actually.
Sure. Yeah, gotcha. Okay, well, excellent. Ralph, I don't know if there's anything else you care to share. Otherwise, I guess... What I'd like to just simply like to thank you for taking time to meet with the Minnesota chapter this afternoon.
Oh, that's great.
Gave a great presentation. Thanks for taking the time to spend with me during this podcast.
Thanks, Kevin.
And again, thank you for everything that you've done for the MTA.
Thank you, Kevin.
Appreciate it.
You're a good man.
Take care.
Thanks, folks. Bye-bye.